Good morning, everyone. Welcome to Prosperity Connection, and we're Facebook Live this morning, and we're going to be talking about reducing debt. So I am your host, Carol Harris, and I work for Prosperity Connection. I'm more in the back office scene. I am data and program support coordinator. And so I've got all of our, a very large selection of our coaches and directors on this call this morning. And we are going to be talking about everything reducing debt. We have a lot of topics to discuss, but our hope is that we have people join us on Facebook Live and we get your questions, and you've got live coaches here ready to answer those questions for you. So I will give our coaches and directors an opportunity to introduce themselves, and then we will get started. So let me start off with Amber Robinson. Why don't you go ahead and give a wave and say hi?
Hi, everybody. I'm here to answer any questions that you have. I'm excited to be here.
All right. Next coach up, we have Hope Johnson.
Hey guys, how are you? Nice to meet you. Sort of, kind of meet you. Nice to see you. Glad to be here on such a sort of a dreary Tuesday. But what better day, all right, to start talking about reducing your debt and starting to get out from underneath it. So very excited to talk to all of you.
All right. And we have Nachelle Harris.
Hi, everyone. I'm Nachelle. I am excited to be here and to talk about debt and what we can do around it.
And we have Tamika Staton.
Hello, my name is Tamika. I'm excited to be here. So let's get started.
All right. All right. And then I have a couple directors online with us. Yvette Baker. Yvette's waving. She's our marketing director. And then we have Tamika Wicker Slack. She's monitoring Facebook. So if you have questions on Facebook chat, just put them in the chat, and then Tamika will send them over to us so that we can answer your questions. So feel free to put those questions in as we go. So let's kick it off. And I know when we talked about doing this class, I was saying that, back in the day, not too far away, I had a lot of credit card debt, and it was feeling like it was swallowing me whole. And I, asked the coaches, that might be something that people might want to know where to begin. If I were to, give one of our coaches a call and ask for help, what would you tell somebody like me to do? Amber.
Well, if you're working with a lot of debt, I think the very first thing that you need to do is just get organized, bring out all the statements, kind of see what's going on and total it up so that you have a good idea of, how long this plan is going to take so that you can, right size your, your expectations. Because, when you're talking about dealing with lots of credit card debt, you're talking about a long-term goal, and those can be kind of daunting. So I think most importantly, organization and just knowing what you want to do first before you start working on it is the best first step.
Yeah, I think back then I had so much that I didn't even know what I had, because I started to not really look at it all or total it up. And I think once I did that and realized what it was, first of all, I was really scared, but I like the idea.
And it's really scary, totaling it up and coming to terms with that number. A lot of people avoid it. And as I say, when it comes to any kind of finance thing, avoidance is never probably going to help you. It's only going to hurt. So just looking at it and realizing, okay, this is what I've got to deal with, and I need to come up with a long-term plan, and this is not going to happen in the next couple months. It might happen in the next couple years, and being okay with that. It's kind of the first step, I think.
Yeah, thank you. Awesome. Anybody else have any advice for something like that? If not, I can move on to the next topic.
I think that's really great a point. So how do you know where you want to go and how are you going to get there if you don't know where you're starting? Right. So that first thing that we talk about in anything with financial education or financial coaching is you've got to know what you're looking at first. Right. And so even though it's scary, part of the problem with not being able to get where you want to get or to get your goals is that something's holding you back. You need to know what that is. So I think that's a great point, Amber. I couldn't agree more. When you're starting, you got to look, you got to open your eyes. So.
Awesome. Thank you. So kind of along those lines, sometimes people get in that debt jam and then they start thinking, oh, I just saw a sign along the corner that said I can get money today with my paycheck. And so is that a good idea? Is that something that would have been a good option for me?
I'll take that. So there's two sides of this. One, those ads are usually for something called payday loans. Feel lots of people in St. Louis, if you haven't taken one out yourself, you've probably seen signs or ads online. And really the big thing, especially if you have credit card debt, is those payday loans are going to come with higher interest rates than the debt you already owe. So that's one side of it. If you're trying to pay down debt, one of the worst things you can do is take out more expensive debt. You don't want to dig yourself into a deeper hole than the one you started out before. And when I mean higher, I mean, a credit card, like a really bad credit card may go up to like 30-something%. But like a payday loan in Missouri, the average is like 443% interest. So that's what I mean by like, you're really throwing your debt into another league by taking on these payday loans. The other part of it is just, those payday loans in general just really aren't a good type of debt to have. Like I said, they're very expensive. They usually don't really do anything to help your credit. And most people cannot afford to pay those. So then once you, more likely than not, that gets sent to collections, then not only do you have this high credit card debt, now you have a new collection on your account. So I would say to anyone considering it, consider literally every other option. Well, not every other option, but, consider all of the more affordable options that you may have, or, seek out some advice before you kind of respond to any of those ads.
That's a really good point. Yeah, I think we get a fair amount of clients coming through Prosperity Connection who have been victimized by some of those types of lenders, or and just pulling yourself out of that is pretty difficult. Okay, so let's think of something a little more happy and positive. Stimulus checks. All right, so let's say we get that stimulus check deposited into our account this week, because I know a lot of people did. I didn't, but other people did. I did before, so I'm still hopeful. So what do? Do I run out and buy something that I've been waiting to buy because we're stimulating the economy, right? But I still have debt. So what's the best plan for that stimulus check? Ooh, Yvette's got her hand up.
So I'm a believer of three things, because I do this with my tax return. I pay down debt, I save some, and I spend some. So because when you're trying to reduce debt, you don't want to blow all the money on the debt, because then you feel like you haven't really accomplished anything. And when we don't feel like we've accomplished anything, we tend to fall off our goal. So I always say live by the power of three. So what I want you to do is, if there is a bill that you can pay off with that stimulus check, a lower amount, maybe something for like $300-400, pay it off, because then you're getting rid of that debt. Next thing is, I'd like you to save some, and you can save 10% of it, great. But if you save something, you still have reached your goal. And I don't mean $1. Please don't save $1. Please don't save $1. At least like $50 or more. I'm gonna, okay, your minimum is at least $50. And then the other thing is, I want you to spend some on yourself. Maybe take yourself out to a nice dinner. Well, shoot, or order DoorDash. That's like going out to dinner, or just maybe go and have like coffee and bagels with your friend if you got your shot, you know, something like that. So and then the other thing is, if you have money left over, write down what you want to spend it on, and make sure on that list you spend it on that and cross it out. That's what I suggest. We always want to write stuff down because we are visual creatures, because if we don't write it down, we're going to tend to forget what we wanted to spend the money on in the first place.
That's a really good plan, because I think the tendency is, ooh, this is extra money I didn't have, let me spend it, when that's fine, but there needs to be some other things happen with it, because there is a benefit to it.
Especially when it's going into your main account, you're just going to get swipe happy. And then by the time you looked up, it's all going to be gone. So be strategic on what you're spending it on.
Right. Now, what if I have some like really pressing bills? What is the best thing to pay first? So, you know, if I'm talking about, I've got some rent that I need to pay, or I've got a specific, you know, like Ameren, you know, how do I prioritize those debts?
My suggestion is, you're always going to need a place to live. So let's talk about the rent first. Let's pay the rent, talk to the landlord, and then have a conversation with Ameren. Right now, Ameren is, I think they're trying to work with people because of what's going on and everything. So, but I definitely suggest that you focus on making sure you have a place to live. So working with your landlord.
Okay, that's good. That's good to know. Great. Any other add-ons to that, or we can move? Do we have any? Just let us know in the chat if we have any questions coming from Facebook Live. If you're watching on Facebook Live, let us know if there's something that you want to know about reducing your debt. And those questions are being sent over to us, so we'll make sure that we address that like right on. We'll take that next. So
yeah, I think Carol, just to kind of follow up on what Yvette was saying there, which was really great about figuring out what your priorities are, right? So this particular talk is about reducing debt, but there's a whole different side of this when you're talking about crisis, right? So if you're looking at things like your housing, your utilities, your phone, your car, with that sort of setup, those are high priority debts that is different from the idea of a longer term reducing debt plan, right? There are lots of little tweaks and fun things that we can do about reducing debt. But if you're looking at those high priority pieces, that's first on your list to deal with any stimulus or any windfall of money that you've got coming in, to work specifically with your debtors, right? Talk with them, talk to your creditors, make sure they know your situation so that you're staying safe. Reducing debt is always second to taking care of your primary needs, right?
absolutely. Absolutely. Okay, so let's talk about what are some of the effects of that debt? You know, I mean, yes, a lot of people are walking around with tons of debt, and, you know, then just maybe add on to it. I know that's what I did. Like, oh, well, I'm already $10,000 in the hole on credit cards. What's 12,000? I mean, what's the difference? What kind of effects come for someone in that situation long term?
I just know personally, when I have debt, it stresses me out. It makes me anxious because you just never know what could happen. You know, it's especially with COVID and everything going on with people losing their jobs. It's just, being in debt never puts you in a position of power. So, you know, it can really stress you out. And I think when you have stress, it's harder to make good decisions. with your money. So it can really kind of affect your whole entire world, getting into too much debt. It can stop you from doing things that you want to do long term, like buying a house or, you know, starting a family, because you're so frustrated and stressed, you can't figure out a way to afford those other things that you want to do. So, you know, especially I see this a lot with student loan debt. It's just killing people, you know, and the only way to get through it is to pay it for the most part. So, you know, it can really, really affect people's mental health significantly.
Right, and it starts small normally, right? For most of us. So it's a credit card that we sort of slowly maxed out. And then it was the second card that we slowly maxed out. And then it was the student loan debt. So it's very emotional, very, very weighing on you. And you begin to feel that shame and that guilt on the background of things that you'll never admit to anybody else that you did. And because you're not admitting it, then you don't admit the next thing that you did. And slowly but surely, it just sort of grows with you. And I think as we're talking about this debt level that just eats away at everything that you want, it's important to remember that it's a slow process to eat your way back out of it. Don't beat yourself up because you're not all of a sudden able to handle $60,000 worth of debt. It took you years to get that, right? So set some really good, manageable goals as you're going along. Eat away at it slowly and just feel those small victories to help bring you back to the win, right? So it's not eating at you.
Another thing I want to add is like a specific example is I know Amber had talked about home buying. So a lot of times when I work with clients, one of the things they'll be surprised at is that the amount of debt you have in the ratio or the percentage of that debt as a part of your take home pay, or as part of your income that you get from your job, that goes into whether or not you will be approved for a home loan. So, you know, I've had clients, they have great credit scores. They may even have a good amount of money saved, but they have so much debt that they still got denied for a loan. And so that's sort of the piece of the puzzle that I think a lot of people don't realize does go into the home buying process. So normally, you know, you don't want to have, for most conventional loans, you can't have more than 36% of your income go towards debt once you include your mortgage, insurance, and any other debt you come into. So that's your student loans, your credit cards, your car loan, all that stuff. So, you know, keeping your debt in control, you know, also really goes into if you have those very specific goals, like, you know, buying a home, or, you know, I've also had some older clients who, you know, they are retired and on a fixed income, but they still have, you know, they're still paying off these payday loans, they're still paying off their student loans. And so now they have to figure out how to live with the same amount of debt, but with a smaller amount of money to work with. So even thinking, you know, 30 years from now, you know, what kind of retirement do you want to have? Do you want to have a retirement where you're still responsible for a mortgage? Do you want to have a retirement where you're still responsible for student loans? You know, obviously, sometimes it's not always in our control, but, you know, especially if you're younger, that's something you can start thinking about now is, you know, when I get older, when I'm 80, do I want to hang out with my grandkids or do I want to be on the phone with the student loan servicer?
Yeah, that really is something to think about. And, you know, and it gets harder and harder to pay off those debts. You know, just thinking about student loans, you know, I'm not the youngest person here, and I have friends that are in my generation who are still working on student loan debt. And you know, they've postponed them, they've done all sorts of things, and instead of basically addressing it head on and paying them off. Sorry, I have a little bit of a dog barking going on behind me.
He just has an opinion on debt, Carol. That's all. He just has some things to say about debt.
Absolutely, both of them. So let's you kind of touched a little bit on debt to income ratio. So is there anything else to add on that, or are we good?
I can add a little not so fun fact that people don't realize is that, so This is very, very technical, but if you have student loans, depending on the type of mortgage you want, the way your student loans factor into that debt to income ratio I mentioned will change. So a lot of people, especially if you're a first time home buyer, will be looking at FHA loans. So those are loans that are backed or you are backed by the Federal Housing Administration. And so the way the FHA loans, the way lenders have to factor in your student loan is that regardless of if you're on a payment plan or not, they will take into account 1% of your balance. And that is what they consider your monthly debt burden. So say, it's not very, I would say like average, I think student loan debt in the US is about 35,000, I believe. So you could be on a plan where you're required to pay $20 a month. But if you're applying for an FHA loan, your monthly debt from your student loans is going to be considered $350 because that is sort of 1% of your debt. Fortunately, if you're applying for a conventional mortgage where they're not held to those FHA standards, they will go by your payment plan. So if I'm on an income-based plan and I only pay $20 a month, then my debt burden will be $20 and not $350. That said, those conventional mortgages that I mentioned, your total debt per month still has to be 36% or less of your income. So that's kind of where things really kind of get a bit technical and it can get a bit confusing, which is, why we're here as coaches to help talk you through these things. But it is important to remember that the amount of debt you have can sometimes limit the options you have, even for things like buying a home, where it may seem a bit unfair, where you're like, okay, well, if I can pay rent, I can pay a mortgage, which is, true. But, when you're going to a lender, that's not the frame of mind they're always in.
Right. Tamika, do you have a question for us?
Yes, we have a Facebook question. The question is, what is a good way to save during a pandemic?
Good question.
Just a matter of which one of us want to take that question, right? Any way that you save during a pandemic or out of a pandemic is a great way to save. I think probably all the coaches will say anywhere that you can make it automatic, right? Anywhere that you can say before you ever even see it out of your paycheck that you're sending that over into savings, even if it's a small amount, $5, $10 out of every paycheck. Anywhere that you can save automatically is going to be the best place to start to find, because we tend to spend, right, $5 for a burger or $5 for a soda or a cup of coffee. Those sort of things, we don't even pay attention to those small spends, right? It doesn't even compute in our brain. So if you can take that out to start with, you're not probably going to even notice it in your day-to-day living. So starting small, especially during a pandemic, if you think that your income is in danger, right?
And I also wouldn't put your main savings account where you're trying to put your emergency fund in with your checking account in the same financial institution. It's just too easy to transfer with online banking. I'm the queen of I'm going to save, and then I just nickel and dime my savings right away. So I have to absolutely put my savings account in a completely different account that I never look at, that it's hard for me to get to, so that I can keep that money.
I was just going to say that, Amber, I think some of the folks at PC know this, but I have a savings account at a bank that is not even in this state. If I really want to go there, I have to, plan it. And I don't have an active debit card that is attached to it on purpose. So there is no way for me to get that money unless I drive there. There is an online access, but that is like not connected to any other bank. It's a completely different system. So I have managed to keep all of that money that I automatically comes out of my check and I don't see it. It's not that much, but I never see it, so I don't feel it. I don't even count that as income. But I was thinking about, the during the pandemic part, and one of the things that we've talked about at home is how much less we spend on entertainment. We don't go out on Friday night. We don't, just immediately go out for dinner. We don't, we're cooking a lot at home and trying to figure out how to use up the stuff in our pantries. And, so like Hope said, just like a quick $5 when I'm running around. Well, I'm not running around. I'm here. I'm in the house. So that's, we make our own coffee. I just thought yesterday as I was making coffee, we bought a brand new coffee grinder at the beginning of the pandemic last year because we knew that we were not going to be going to Starbucks. Well, that's a whole year of not going to Starbucks. So I can't even imagine how much money we have saved just on that run through, grab a coffee on the way to work thing. So, that's probably a lot of savings added up just by doing that. And I still had good coffee.
And to piggy off of what Carol says, because it's nice to, everybody, save your $5 and everything, but it's nice to give examples and be like, well, think about this, because each of us are living different lives. But think about, okay, if it wasn't a pandemic, what would you be doing? Like Carol gave the example of doing the entertainment on Friday nights, which we're no longer doing. But when the pandemic first started, I thought about all the food, the money I spent on lunch. I'm just that person. I'm an empty nester. I'm like, you know what? I'm just going to go out to eat. Every day of the week when I used to go into the office, I would go out to eat. And so think about that. So think about your habits that you would normally do pre-pandemic versus post-pandemic and say, okay, here's the spot to save because I no longer go out to eat. So I'm saving that money. I don't spend as much money on gas a week. So there's money right there. So, I mean, even if it's like small amounts, but it's going to add up to a big thing. Because I always say this thing, little goals equal big goals. You start off small and as you graduate, it just builds up into a bigger snowball. So you got to remember that. And then another place that I realized I no longer go, well, I spend a little bit more on wine now, but we won't talk about that. But look, it's a party in the house, okay? But the other thing is just, there's something, just hanging out with friends, just that whole thing of like stopping by a friend's house and grabbing something, those places. So you got to think about like areas in your life. Okay, if it wasn't a pandemic, what would I be doing? Oh, well, there's a place to cut. There's a place to cut. The places I wouldn't cut is I actually added another streaming service because I am in the house. So, but you got to find that happy balance. So that's what I would say.
I would also say if there are certain, okay, if you're trying to save during the pandemic because you're like, I need to prep in case something happens and I need money, then I would say if there is a bill or a debt that you don't need to pay, take that money and save it. And so what I mean, so for instance, a good example is federal student loans. You don't have to make any payments on your federal loans. There's 0% interest. So the balance I had in, March 2020 is the same balance I have in March 2021. So, either a lot of people have been using that extra money and paying bills and whatever like that. But, if you have a steady income and you have the money you would have been paying for that student loan, put that money into savings.
Okay.
Worst comes to worst, you will have all that money saved up and you can just put it towards your student loans later rather than chipping away at your income over months for something that you can't get back. So think also, are there things that I don't have to pay for that I'm still paying for, and cut those out, especially debt payments where it's not going to hurt you to not pay. Like I said, the student loans, if you don't have to pay it, just save that money. And then if you really want to just pay down your balance, put it down, once the moratorium or whatever on the loans is lifted.
I think it's funny.
We have
too.
another
Sorry,
question.
Mika.
I'm sorry, Hope. We have another question from Facebook Live. The question is, what is the best order to pay off debt? Small to large, large to small, interest rate base? What is the best sequence? Thank you, Ms. Jenkins, for that question. Anyone who wants to tackle that?
So I'm going to say this answer is going to be different for everybody. So my suggestion is, because I am a list person and I like to see things happen, I would say largest debt to smallest debt, or depending on how you feel, sometimes it's smallest debt to largest debt, because sometimes I just want something little paid off and I can feel that sense of accomplishment. And other times I'm just like, I'm gonna climb Mount Rushmore. I'm gonna tackle this debt in this many months, and I come up with a plan and I do it. So it really depends on what is your priority, and what do you want to get rid of the most. Like if you're going to feel good getting rid of that small debt, do the small debt. If you're going to feel better getting rid of that big credit card debt with all that interest, do that. So my suggestion is figuring out which debt do you want to tackle first.
For sure. And, not all debt's created equal. Like I would say credit card debt is probably going to cost you the most. So that would probably be my first kind of focus, just because you don't want to have to accrue extra interest. But, student loan debt, although it needs to be paid off, usually has a lower interest rate. And, so, if you're trying to pay your student loan debt before your credit card debt, I would say that's probably not a great idea. It just kind of depends on your goals long term, and how much those interest rates are. I don't tend to use interest rates as the reason I pay or make a list. I tend to do like lowest balances to highest balances, because I like that sense of accomplishment as well. And I feel like it's more mental than it is math at that point. So I agree with it.
Yeah, Amber, and Yvette, that's one of my things. I like to see, I feel like I've accomplished something when I see that zero balance. So for me, I go from the smallest to the largest. And then what I do, so once one is paid off, whatever I was paying on that one, I take the payment from that and add it to whatever that second payment is. That way they're getting more than just the minimum balance. And once that paid off, I just take those funds and I just trickle it down. And when you do that, for me, I'm like Amber, I like to see the satisfaction, it satisfied me to see, even though it may, be something really small, but it's showing that, hey, I was able to get this done, and it gives me a sense of accomplishment. So that is great. So thank you guys. All right, Facebook Live, keep the questions coming. Come on, come on.
I did want to add something too. I believe Ms. Jenkins' question, or an answer to her question, is it also depends on your goal. Like why are you looking to lower your debt? Because if you come to me and you're like, I want to lower my debt because I need to raise my credit score, for something that's 3 months away, assuming you don't have any sort of pressing debt that's going to like cause you to lose a house, home, whatever, then I might say, okay, well, let's look at your credit card balance. Because getting your credit card balance lower may give you a couple quicker, credit point boosts. So if that's sort of what your goal is, then we may work together to prioritize some debts over others. If you got a lot of debts and we're looking at the debts you have out there, and one of them is you owe back taxes, I'm going to be like, don't you touch those student loans, don't you touch any of these things until we figured out a plan to help you pay down that, back taxes as quickly as possible. If you have a warrant, pay that off before you even think about a credit card. So, also your goals and the sort of urgency of the debts you have out there. Some are going to be higher priority than others. You may have a car loan, but if you can afford your minimum payment, I'd rather you pay off those warrants so that you still have a car and a job. So that, I think that's the other part, is sort of, are there any that are urgent and pressing? Because regardless of interest rate or balance, the pressing ones you should pay off first, even if there are other ones that maybe you're more excited about.
That's excellent advice, all of you. Let's see. Let me see what we haven't talked about, because I think you guys have grabbed a lot of those topics. Yeah, Tamika.
What are some ways that a person can kind of going back to the first question, what are some ways that a person can save through the pandemic? So just say, for instance, your cable bill. Should a person, shop around? Far as your car insurance, how often should you look at that to see if you can save, money? Should you reach out to your credit cards and see if you qualify for a lower interest rate? Are those some of the things that, we can do in order to, be able to put those extra funds in a savings account for emergency?
Yep, Tamika.
Most definitely. I would say that during this pandemic, I went to my insurance company and I stated that I needed a lower rate. Every season it was going up, and they said, "Oh, the rates are going up," and I knew that wasn't true. But I left State Farm. I went to Geico and I got a $50 discount per month on my car insurance. Well, State Farm decided to call me back and say, "Hey, we'll give you $35 more off of that." So they will fight for you. So I definitely recommend calling your insurance companies on their bluffs as far as rates that they can offer you, especially if they know that you're going to move. I had an advantage with me is that if I move my car insurance, I'm moving my house insurance. You're going to lose both policies if you don't reduce my rate. And being that they were able to reduce my rate, it kind of let me know they could have done it the whole time. So making sure that you take advantage of those opportunities. Also, you are able to call your credit card companies and ask for a temporary low interest rate. That is when they reduce your interest rate and allow you some time to pay down on that principal. And that's really helpful when you are saving money or trying to reduce debt. I can pay it down fast if more of that money is going towards the principal amount. So I'm not asking them to reduce my interest rate and then paying less. I still want to pay the same amount, but I want to, tackle that principal balance versus paying so much in interest. And these credit card companies will work with you because they don't want you to not pay. The goal is to get you to pay at least the amount that you borrow back. Then we'll discuss the interest, but we still want you to pay us back in general. So they'll work with you. So it's pretty flexible when it comes to finding different ways to reduce that debt. Like Yvette said, you are working less. For people who are working from home, you spend a lot less gas. You're eating out less. You're going to less places. You're at home. So you shouldn't be shopping for a bunch of brand new clothes that you can't wear out. You don't want to be that one person that has done all this shopping during the pandemic, and the first day that the economy opens back up, you got to wear everything at once because you've done so much at home. You want to kind of spread that out and save as much money as possible. So a lot of ways to save and reduce your monthly bills during that time period.
Tamika, thank you for saying that, because that was one of the things I totally forgot to mention. So for me, I honestly did think, so don't judge me, that we would be back to work in June or July last year. I was like, oh, we'll be back to work. And I did go get me some summer clothes. And then when I realized it wasn't going to happen, I made a promise to myself that I wouldn't buy any clothes for the rest of 2020 or 2021, unless it's workout clothes. So unless I'm getting running clothes or running shoes, that's the only thing. So I have not bought any clothes. And believe it or not, I'm actually saving a lot of money, because normally I would buy work clothes like every 2 months. I would go like add a shirt and pants or shoes or something. And I'm not doing that right now at all. So that's another good way to save money too on your clothing budget. Thank you. You just totally reminded me of that.
I had to set limits for myself. I had to say because I was like, I'm at home, I'm going to work out, I'm going to be so fit. You're not going to be able to recognize me when outside open back up. But, I did buy a cycling bike, but I told myself that, I wanted something else. And I was like, no, unless I get on this cycling bike for an hour, 3 days a week, I'm not going to buy any other equipment. So sometimes you do have to set yourself limits. You feel like, oh, I have a little bit more money because I'm spending less outside. I can spend more inside, when you could be saving that money as well. Sometimes we don't see when we're overdoing it until we look at all the stuff we bought during the pandemic. So making sure that you set limits for yourself. Now, if I'm not going to get on this for an hour, I don't need anything else new. Let me get comfortable with this and then add something new, which I haven't been on for an hour, 3 days a week, so I haven't bought anything new. That saves me money. So there's always that.
Amber.
Well,
Bring
oh,
up
go
a really-
ahead, Amber.
You bring up a really good point, Tamika, because I feel like sometimes when we're working really hard and we're doing good things for ourselves, we kind of get in this justification loop where we like kind of like damage ourselves because we're doing such good work. Like, you know, I'm working my butt off, so let me get this outfit, or let me get this fancy dinner, or and that's kind of, I think, a way that it kind of creeps on you that you're spending more than you expect because you're giving yourself treats because you want to take care of yourself. Nothing wrong with taking care of yourself. Just remember, are you taking care of yourself by spending this money, or are you making things harder? You know, for sure.
I deserve these things, but I also deserve to be debt free. I deserve to save money. So, you know, either way, just picking the things that you feel you deserve that's going to benefit you a lot more.
And
Because the
remember
opposite way
that
too, though.
we also are making it easier for us to get into that because we have this lovely thing and we have all the apps on it, and we have the apps connected to our credit card. So all we have to do is just press the button and we're spending money. So even I realized, like, deleting the apps, like I don't have Grubhub or DoorDash or Uber Eats on here anymore because I realized that all I was doing was hitting 2 buttons and I was spending like $40.
One of the things I remember seeing on, I think like Instagram or something a couple years ago that you guys reminded me of is there was this woman who was trying to reduce her shopping. And so what she would do is every time she would go to buy something, she would transfer the amount of money she would have spent to like paying down her credit card. So, you know, I wanted to get this $20 sweater. I was at the checkout and, you know, instead of paying $25 on the sweater, she would just transfer that money. So she's like, the money's gone. She had, she'd actually declared her credit card lost so that there's no way she could use it. So she just declared it lost. So she couldn't access her credit card. She couldn't spend on it because she hadn't requested a new card. So if she had, whenever she transfers the money from, say, you know, oh, I was going to buy this $25 sweater, instead she transfers the money straight to pay off her card. She can't spend that money. That $25 is gone. Now she doesn't have that money to shop. So, I mean, you can do that with food. You can do that with whatever. You know, obviously, this is for people who, you know, have a steady income. You know, they're not sort of doing that emergency budgeting we talked about last year. These are people, you know, you have a steady income. You're really just trying to stop, you know, bleeding money that you don't need to. But that was a really cool idea that I remember seeing this woman do 2 years ago. And I was like, oh, that's amazing. So, yeah. That's
Okay, Carol, we have another Facebook question.
Yeah.
The question is, how do you make savings fun, especially for a family? Thank you, Mr. Woodruff, for that question. Who wants to channel that one?
You can always make it a competition. I will say, when it comes to saving money, everybody in your entire household has to be on board with you for you to be successful. Because if not, if they aren't on board with you, they're against you. They will spend, they will cause you to spend, they will help you spend, they will ask, okay, she got extra money because she's not spending on herself. Maybe I can spend it on me. Maybe she can spend it on me. So I do have a chart. And my son and my niece who are living with me, they go back and forth over who has the most money. So they are working their tails off. They are talking about who has the most. They are trying to see if there's anything extra they can do. I'm getting extra help around the house. And you know, they're 8 and they're 10. So like $1 is a lot of money to them. Well, as they think. So they are doing as much as they can. I am saving my money because we're not going places. They are saving their money. Everybody in the house is saving. So I would say if you can turn it into some kind of competition between you and the family members, then I would say that's probably a good method to use.
I also think if you want to make savings fun, it has to be a goal that everybody's excited about, you know, something that everybody wants to do. I wouldn't try to make my emergency savings fun for my family. It's probably not going to happen. But would I make Disney World fun for my family to save up for? Absolutely. And I would probably be really, you know, pushing my family to like, hey, we're going to save up for this. We're going somewhere. Let's talk about how we can make this happen. But, you know, sometimes savings isn't fun. Sometimes it's just something that you do because you know it needs to be done. So it kind of depends on what you're saving for.
And one of our Facebook live participants put in the chat, try to pay on time to save on late fees. So, and we all know how much late fees. So, that $38, $35 and all of that, that can be $38 or $35 that can go in your savings. So just make sure that you're paying bills on time. It is okay. So let's talk about that, ladies. We didn't talk about that, especially now that we're still in a pandemic. We did not discuss grace period. So can you explain how grace periods work when you have your mortgage or your car payment?
Yeah. So with grace periods are just a time period after your payment is due where the lender is going to allow you to make a payment without charging you a late fee. It's important to remember that you don't include this grace period in your pay date, because on your actual pay date, your payment is due. After that pay date, no matter if they charge you a fee or not, it is considered late. It is still late, even if they give you a grace period. So you do want to know that I do owe them on time, but I do have this emergency cushion of about 14, 15 days to get my payment in before they start charging me late fees, before they start sending me threatening letters, before they start calling. But I also have up to 30 days before they're able to report this late on my credit report. So I have a little cushion, so they can't tell people on my credit report that I'm late until I'm 30 days late, even if they charge me a fee and have done all those other, aggressive tactics before. But the grace period is almost like a cushion. The check is in the mail, it's on its way there. I did ACH a couple of days late, but it takes a couple of days to get there. It's just giving it time for your payment to get there by all methods, is what that grace period is typically used for.
Anyone else would like to add to that?
But don't count on the grace period, because if you wait till the last minute and you're waiting till like the last day of your grace period, it's always when you wait till, it's like printers. When you wait till the last minute to print, that's when it breaks. When you wait till the last minute to pay and it's the very end of that grace period, especially if you know you could have paid earlier, because I used to be like this, like I could have paid earlier, but just something in me didn't want to part with my money until I absolutely had to. And then the bank went down. Bank website was down. They weren't doing anything. And I had to pay a late fee because I waited till the last minute and then everything just went chaotic.
And what I've started getting in the habit of doing, because I found myself, I've always been a stickler about paying my bills on time. However, because I'm one of those, I don't want to give away. I feel like paying late fees, paying overdraft fees, I feel like that's giving away money. And so I don't like to give away money that I can't get back. So therefore, what I found myself doing is, if I get paid on the 7th and my bill is not due to the 15th or the 20th, I'll just go ahead and pay it then. And that way I know it's out the way. Because what I found myself doing is, oh, I got paid on the 7th, my bill not due to the 25th. You know what, I'm gonna just let this money sit here for a minute, because I get paid again on the 24th. So yeah. But then what you do, you end up spending that money on something frivolous that you probably didn't need. Now, when you get paid on the 24th or whatever, now you got to take care of that bill that's due on the 25th. So it's kind of like you robbing Peter to pay Paul, even though you have the money, but that could have been, that money from the 24th could have been saving, or it could have been for something that you really needed, in your home or whatever, or to get something fixed on a car, but you just spent it just because you had it sitting in a savings account. So I've learned, as soon as I get my check, whatever is due, regardless if it's due later on, I go ahead and pay it. That way I know whatever is left is mine.
Mhm.
So that's my little tad bit.
Right,
I was
and we're
gonna
talking about
also,
reducing debt,
go
right?
ahead.
I mean, we're talking about reducing debt, so we want to give our money jobs to do, right? The grace period is great and it helps you in this whole process, but remember that our point and what we're trying to do is really focus our money towards what we want it to do. So being able to use a grace period if you need it, great, but make sure you know what that money's for, because like Tamika said, if it's sitting in your account sooner or later, you're going to buy a pizza or a taco with it, right? Because it's just extra then for you. You haven't given it a job. So yeah, and using that time period wisely for yourself, right?
I was going to add to use the tools that are available as far as like your bank account, your online banking, making sure you set up automatic payments so that you automatically account for it. A lot of banks, I know ours does, it knows, we have it set up so it knows when that money is due to go out. So the balance is sort of adjusted. So even though there might be, oh, we just got paid and we have all this money, it's already showing on like a little bar graph that yes, you have all this money, but this much is going to be going out. So don't get so excited about this balance. And then also I know, I think Tamika, you were talking about, you know, my bill is due on this day and I get paid on this day. You can change your due dates with your credit cards to make them due like the day after you get paid, or I always do the day after just to make sure there wasn't some kind of timing issue, that all of a sudden the money comes out before the check ever went in kind of thing. But you can sort of call your, you know, your companies and say, hey, can you make my bill due on this day just because this is when I get paid? And you know, I used to be a teacher and I worked in a school district where I got paid once a month. So that was very important that I knew that that money was coming out as soon as I got paid. So I didn't have this like mystical feeling that I had all this money when I really didn't. So, you know, just sitting down and taking a little time to make sure that you get those bills aligned and the payments going out aligned to when you actually have the money so that you don't trick yourself, but just using some of those tools. And yeah, I know I'm not a financial coach, but I've made a lot of financial mistakes. So I'm like your don't example in a lot of ways, but I have learned so much from my past mistakes that I could probably write my own little book here. So, any other questions? I know we got about 8 minutes. So how about Facebook Live? Anything happening out there right now?
Looks like I'm a little quiet. However,
Okay.
we did have 5 people that shared our page.
Oh, good. Yeah.
Awesome.
Keep sharing it. Keep letting people know that we're still on here.
Sharing it.
What about settling debt? I see we talk about this,
Yeah.
like what kind of settlement tips do you guys have? Like you got the debt, is there a way to get it reduced or settle it out, or just basically say, all right, I need, you know, what do you do there?
No one's gonna take it. No one's gonna take it.
I'll start off.
Okay, because I was like, I'm the Darth Vader of settling debt. I don't want to go first. So
I mean, I guess like the tips I usually give people is, one, don't commit to a debt settlement account you can't afford. So like you don't want to default twice on the same debt. That's one. And two, a lot of, especially collection companies, they'll try and bully you, or they'll try and like make you feel like it's the end of the world and like Darth Vader's going to come out and like steal your child if you don't give them like the exact amount. And like 9 times out of 10, they're just bluffing. And like, you have your budget, you have how much you can pay. And at a certain point, they just got to take or leave what you got. And so I think that's the biggest thing, is you don't want to tie yourself down with a payment plan, for instance, where you're obligated to pay this amount and on a collection where it's already hurting your credit, y'all. Like it's already there, it's already doing its damage. Don't commit yourself to money you don't have, especially for a debt that really most times should be lower on your priority list than taking care of your daily necessities. Like do not rob Peter to pay Paul, the collection company.
Nashelle, I also tell them to start at, when you start negotiating on that settlement, to start at 30% of the amount that you owe, and then let them talk you up to 50%. You know, if they start going over that and you're uncomfortable with the amount that they're asking you to pay, then I tell them, I say, well, just get off the phone. I apologize. I don't have that. I probably won't have that no time soon, but you know, you have a good day and you just get off the phone. They will eventually send you a settlement letter. They will, but you can't pay what you don't have. And you shouldn't agree to pay anything you cannot afford to pay back. So I tell them, start small, offer up, only agree to what you can afford to pay. It's delinquent, it's already there, it's already on your credit report. Not paying them is no further harm. And 9 out of 10, you know, they probably won't take you to court immediately. If you default on their debt twice, they probably definitely are going to take you to court. But unless it's an extremely high amount and they can make a ton of profit off of this one case, they probably won't immediately run to court. So also know your creditor, do a little research and see what other people are saying about these debt collectors and if they've been taken to court, so you can kind of assume whether they're bluffing or not. So know your creditor.
We have a couple more questions from Facebook Live. So Tamika, what you got?
All right, so the first question is the public service loan forgiveness plan worth it? And do you think it will last? The second question is, any recommendation on consolidating student loan debt or reducing interest? All right, Nashelle.
I can touch on the public service loan forgiveness. So I may be biased because I'm doing it, but I do think it's worth it. I mean, I think first of all, it's free, so you don't have to pay to do it. 2, whether or not you are doing the public service loan forgiveness program, you're going to be making those payments anyway. And I would say 3, that the biggest part of it is you have to be really on top of your paperwork, and you unfortunately have to do a lot of research. And so, you know, maybe we'll talk about a bit more, go into more detail about student loans later, like a blog post or something. But just like for now, like the thing to know is that you really have to be on top of your paperwork. What you're going to have to do is verify your employment basically once every year. Even if you don't change jobs, you still need to send in the same redundant paperwork. And that was what I remember reading tripped a lot of people up, is they weren't getting that public service loan forgiveness because they're like, well, I've worked at the same place for 10 years. I shouldn't have to update. And then none of those payments counted. What people don't realize is that you can actually back count payments. So I started the program last year, and I was able to get counted payments at jobs I'm no longer at anymore. You just have to hopefully have a good enough relationship with that past employer for them to sign those papers for you. But I do actually know someone who went through the program and completed it and got all of her loans forgiven, didn't owe taxes on it or anything. So it's possible. It's just very difficult. The numbers are very not encouraging of the people who complete the program. But like I said, you're going to be making those payments regardless. It's a free program. You might as well try at the very least.
And as for refinancing your student loans, you know, it's a double-edged sword, you know, especially if you refinance with private student loans, you could lose some of the protections and some of the payment plan options that you had when you had loans with the federal government. So, you know, research it, be really careful when you do stuff, when you make those big decisions like refinancing student loans, because there could be complications that you're not expecting.
It's also nice to remember that federal student loans have no statute of limitation. That means that they can sue for collection until you pay. Private loans do have a statute of limitation, which is 6 years. So with that, you do lose those protections. However, you can put private student loans in a judgment, a bankruptcy, and things like that. Federal, you cannot. So also, you know, weighing out those options and making sure you know all of your information before making your decision, like Amber was stating before.
Very good. Good answers. I think that the landscape has changed a lot on, you know, student loans. So you guys are in the thick of it. So it's good to get answers from people who are managing and navigating right now. So that's awesome. Do we have any other Facebook questions, Tamika? I know it is 11 o'clock. Are there any, just to our panelists, is there anything that you want to add here as we wrap up our session today? Is there anything you guys want to add?
If you wanted more information on predatory lending, I did do a predatory lending class on the 4th. Hopefully that will be published soon. You know, just to kind of clean up your skills and see, okay, what have I been involved? How do I avoid these things? What do they look like? I also touch bases on some identity theft information in that class. So when that's published, go ahead and look that up. Also for this class, the goal is to become debt free. It's to owe as least many creditors as possible and bring home majority of your income, a majority of your check for your own personal purposes. So whichever method works or don't work, try something else. Keep trying to reduce that debt because you need it gone. To be able to afford to live, you need that debt to be gone. So if you are having troubles, reach out to one of our coaches, sign up for a coaching session. Definitely let us know what you got going on. Even if you don't want anything too formal, you can always ask a question. Hey, I just have a quick question about this or that. And Curl is going to do her best to answer those questions. If she cannot, she will refer you to one of the coaches who will be able to further assist you. So hello@prosperityconnection.org is the email. Curl also posted the number in the chat box. So just let us know.
Yeah, definitely. I'm the person to reach out to. So that phone number, 314-256-3995. Those calls go to me, even if I'm at home and not in the office, which is 99% of the time I'm at home. But those calls come to me, and if I don't answer, make sure you leave a voicemail. A lot of people call and they hang up thinking, oh, there's nobody there. Leave me a voicemail. And then also you can reach out at hello@prosperityconnection.org. Again, tell me what you're looking for, give me a good phone number, and then I can send that out to our coaches and have somebody reach out and help you work on solving these debt issues and reducing your debt or any other financial questions, help that you're looking for. And we also do have a YouTube channel. So when we record our classes like this one today, those classes get posted, and a few days after the class, they go up on our YouTube channel. So if you just type Prosperity Connection in, you'll see it. It'll pop right up there. If anyone else in the call can grab that website link and post it for me, since I'm not good at talking and typing at the same time. So I'll give them a second and see if somebody can copy and paste that link for you. And there it is. Thank you, Nichelle. So it's been a great session today, and we're really excited to have people join us through Facebook today. And like I said, just reach out.
Yeah, I would say, guys, thank you very much for being here. We've enjoyed talking to you and seeing all of you on a very important topic. Wherever you start with it, just start, even if it's small, right? Give yourself an opportunity to make a really big difference in your life by reducing your debt on this one. It's going to make such a big change. So if you need help, hey, we're here to help you with that. Thanks for being here. Really, we enjoyed seeing you.
Thank you, everyone.
Thank you.
Bye, guys.
Bye.